Hello and welcome to another update video about Bitcoin. Exciting times in the crypto market. Today Bitcoin rather quiet. So it's basically been consolidating all day in this structure here, in this sort of bull flag structure. Yeah, it's doing a bit of bull flagging here. We've been talking about that already in the previous video. We're just climbing up the stairs, right? Step by step here. This is a strong bullish structure at the moment. At least as long as we're holding 29,130. That support area hasn't changed, and we're going to talk about what would happen if we break it and what are the targets to the upside. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific trading view indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so let's first of all zoom out a little bit, just remind ourselves of the overall structure here. Key turning point was the 10th of March low, obviously. This was the confirmation where we basically prevented a new bear market low, at least for now. Yeah, so we've been talking about that since end of last year, really. And we've talked about if we get into this wave 2 pullback area, and if we see a trend reversal there to the upside, which we did see, then new bear market lows will get much less likely, which doesn't rule them out completely, but for now we can ignore them in the analysis. Very important, because if you don't, if you focus too much on the bear case, as long as we're holding above support, it's not worth anything, right? So it's not worth anything for trading unless you want to, let's say, short for risk management purposes and things like that. But we cannot rule out new bear market lows at this stage, but for now the trend is clearly up. This was a nice trend reversal area on the 10th of March and relevant short-term, medium-term and long-term. Since then we've been moving up in impulsive wave structures. So we've had here a move of the 10th of March low to the sort of 14th of March high. In a wave 1, we came down in a wave 2, rallied in a wave 1, came down in a wave 2. So we have this bullish 1-2-1-2 structure. And basically within that third wave rally then, we've had another 1-2 setup and another 1-2 setup. And this is super bullish. Now, if you have too many of these 1-2 setups, it can get unreliable and they can break down eventually. But for now, my focus remains on higher. It's a bit like a house of cards that you build up, and if you have too many, it will just break down. It's just, if you understand Elliott Wave, you know that 1-2 setups are probably the best setups you can have, because they give you a very good reward to risk ratio. So we have a lot of them, okay? Now, if they all work out, it would mean that we have a super bullish structure. However, you always have to be careful when you have too many of them. Now, at the moment, we're holding all these support areas. As you can see, I just need to zoom in. Yeah, we had more here, but I took them out to not overwhelm the chart. But coupled with a possible trend reversal that we had here, which was amazing when price moved up more than 40% since then, really good profit for anybody who entered here as well. But then we had some more, anybody who missed there, we had some more here, there, yeah. And that's how you need to understand these. These are the support areas that can be used for trading. Now, I'm not telling you to use them for trading because everybody should have their own trading plan, strategy, and so on, but you can still use them for trading, consider them. I had a question by someone who asked, obviously we've got these 5 waves up, 3 wave down structures, possible entry points. Have they happened already? Has this main 5 up, 3 down structure happened already? And yes, the main structure that we've been talking about has happened. That was here, this 5 wave move up off the November low to the high in February, and then the corrective structure down in a wave 2. This was the green trend reversal area that worked out. But then these happen every day, right? I mean, it depends on what time frame you're looking at. Yeah, you had more trend reversal areas here, 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 and and even here now that worked out as well. At some point they will break, right? But depending on the time frame you're trading, you can use these for your trading, because the advantage of these boxes is that price, first of all, should, in the current wave pattern, it should hold those support areas and create a trend reversal. All of these would have been profitable trades. And the advantage of them is as well that it tells you exactly about your risk management. So the beauty of Elliott is it gives you really, really good areas that you can measure your risk from. So you always know where does your risk sit, because below these areas, it means you're going into a different wave structure. You're going into a different scenario. And when you know how does that alternative scenario look like, it allows you to understand your risk, and then you can set your stop losses accordingly. Just a little bit of an explanation how these are to be understood. They're not just simple support areas. They are Fibonacci support areas based on mathematics, and they are based on, basically where in the current wave structure the price should reverse. So they work out quite often, not always, but of course nothing works out all the time. Like a trend line, at some point they will break, yeah, but as long as they hold, they can be traded. And if they don't, well, that's why you do risk management, right? So very, very important to understand. And as long as these are holding, we focus on higher, and we have reached here, obviously, the next trend reversal area that was here yesterday, and it worked out. Anybody who entered in this area already is, even if you just entered at the top, already is sort of nearly 2% in profit. Now, that's not massive, but take all of these previous ones into account. Yeah. Right. So what I wanted to talk about is where this looks a bit like an impulse to the upside. So what at this stage is unclear, is this already that 5th wave complete? If it is, it's not a reliable one because it is basically too short. The move up fulfilled minimum expectations for this 5th wave. Now, what does that mean? Well, that means that this 3rd wave, highlighted here in blue, could already be finished, yeah? And then we are now again in the blue 4th wave. Is it reliable? Probably not. I won't move those waves yet, so just leave them where they are or they have been, because it's not, for me, very clear, is this wave 5 really over or not? It is too short to be a reliable 5th wave, but it is a 5-wave move. So it's either that yellow wave 5 is in, yeah, or that this is only the 1st wave of the 5th wave. So actually, let's look at what are the targets to the upside here. If the wave 5 is actually still ongoing, what would be the ideal target for yellow wave 5? So to get to that, we need to take waves 1 through 3, go to the low of the 4th wave, and then target-wise, we talk, ideally sort of the 31.5K area. Yeah, that always shifts a little bit depending on how low we go, but sort of 31.5. I think in the previous video we talked about 31.5 to 31.8K. So that would be reliable, a reliable 5-wave move. This is, but target-wise to the upside, we talk about, this could even go to 40K, right? If it works out, and if all these, the micro support levels are going to hold, right? I'm going to always, on the way up, I'm going to give you always the relevant support area against which can be traded. Now, shouldn't say it like that, right? But I give you the support area where I believe we are morphing into a different wave count. So again, it's all for risk management purposes. And what happens if we break the support area? Well, I would think if we do, first of all, I would consider another 1-2 setup, which can go a little bit lower. But if we then take out here sort of the roughly, and I would specify it then a little bit further, but if you take out the 28K area or something, then we are coming back a bit deeper and just have a different structure here, maybe a high B wave, and would come down in C into one of these lower support areas. But again, similar to the ETH chart, it would just be a deeper pullback to start with in a bullish scenario and not necessarily bearish. Short-term bearish, yes, of course. But yeah, that's everything for now. I mean, what I cannot rule out is obviously that this fourth wave in yellow is still ongoing, because we didn't really go very deep into the support area. So maybe with a, I did label it as WXY complete, but you can never rule out that this X wave is still ongoing in a larger structure. But if we get a sustained break here above the $30,600 level, then I think we are in the fifth wave, if not already further ahead in the overall structure. But yeah, the structure reveals that we should continue to move higher without any stronger pullbacks, rather more shallow pullbacks. But price still needs to confirm that. I will keep a very close eye on the support areas, and if anything changes, I will of course make you aware. All right, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.